Hello all, welcome back to InvesfincAdvisors. After today's action, the big question is, what's next for Friday, June 13th? Well, we are about to unlock the key support and resistance zones for the major indices that could hold the answers. And there's a crucial second half to this story, where we have done a deep dive analysis on the stocks that made headlines on Thursday. So stick with us to the very end for our exclusive analysis on whether their momentum can continue or how you might approach them tomorrow. Now, before we jump onto the details, please go through the disclaimer. Now, let's begin with the analysis on indices. First up, Nifty 50. So, today we saw from the high levels of around 25,200 odd, Nifty started sharply falling down, and this fall continued towards the lowest levels of around 24,825, and then finally towards the end of 1 hour we saw gradual recovery on up, and markets have closed 1% down with 253 points below yesterday's close. Now what next that we can expect tomorrow? So it has become very clear now at the higher zones of around 25,200 to 220 odd levels, despite we moved there, then today it has made evident that market is not in a mood to go high, and at all the higher zones we are seeing significant selling pressure. That is the reason we saw a sharp fall today, and of course there was a bad news of about the airplane crash that could also be one of the reason for the negative sentiments to continue. But yes, today's close has been decisively lower compared to the lot of previous trading days sessions, so that suggests that there is a big sell-off that had happened. Now from tomorrow's trading session, for us the support would act as the today's low, that is 24,825. If tomorrow's trading session we further see the fall continues below 24,800 odd levels, then this fall might continue for the next 2 to 3 trading sessions as well, until 24,600 odd levels. On the higher side, today's high or maybe today's open around 25,164 odd levels should act as a strong resistance. So as long as we do not cross these levels, then we should continue holding the shorts. So once we cross above these levels, only then the longs should be open. So the crucial levels here are 25,164 odd levels on the higher side, and then 24,800 odd levels on the lower side. Now let's see from the perspective of open interest. So since we have closed on a bad note on 12th June expiry for Nifty, so next weekly expiry is on 19th June. Now we have already started seeing there have been significant open interest additions near to at the money, or just slightly above the at the money levels of around 24,900 odd, where we see significant open interest positions on the call side being built up. The higher side, if we see 26,000 remains the stiff resistance, and then at every strike we see good open interest positions on calls have been built up. On the put writing, somewhere at the higher levels of around 25,200 and below we see some unwinding that has happened, but yes, there are few open interest positions that are still held or continued. Now in tomorrow's trading session, if we start falling below 24,800 odd levels, then that should be considered as a stop loss for all our longs, and then we should freshly initiate the short positions once we cross below like 24,600 odd levels as a strong support. So till then we should have a wait and watch approach, or maybe slightly or maybe mildly take the long positions. So overall 24,600 on the lower side and 25,200 on the higher side. So this 600 point zone would be the range that we would hover in the tomorrow's trading session or in the next upcoming week. So PCR has fallen down to 0.6, which is not at all positive. At the money also it is trading at 0.62, which is not bullish. Next is Sensex. So Sensex also moved towards the higher levels of around 82,661 levels, where it had crossed those significant resistance of around 82,500. But from the top we saw a sharp sell-off coming in, and this sell-off continued until 81,500 odd levels. However, there was a slight recovery of around 150 odd points from there, and Sensex closed around 81,700 odd levels. So there have been a decisive fall of 800 points in just one single session. So as you could see, the overall bullish candle what we had seen 4 or 5 days before, almost 70% of that has been fallen down. So now Sensex is at a crucial juncture. If we start trading below 81,200 odd levels, then we will be continuing towards the sell-off pressure, and then this sell-off might continue for almost like next week too. So on the lower side, 81,200 should act as a significant support, and on the higher side, 82,550 odd levels should act as a strong resistance. From the perspective of open interest, yes, we saw some unwinding at the higher levels on put writing, and there have been huge build-up of call writings at all the levels beyond 82,000 odd. So as you could see, significant open interest positions got added in just one single day, and compared to that with the put writing, there is no match at all. So there are high possibilities that once we cross below 81,500 odd, which is a round figure, then we could further see a lot of selling pressure from calls would come in by additions in the open interest at all the levels around 81,500 and below. So PCR is again weak, trading at 0.5 overall, and 0.62 at the money, which is again not bullish at all. Next up is Banknifty. So in fact, yesterday itself we had notified that Banknifty is on a selling spree from the higher zone of around 57,000 odd levels, and we have roughly shaved off around 900 points from the highs. So in fact, today also we opened almost like flat to slight positive, and then this positive momentum continued until 56,600 odd levels. So there was expectation that it would sustain. However, the sell-off came in, and we closed at 56,082 odd levels, which is far below the 56,500 odd levels where we have been taking significant support. Now that support has been broken, so our next immediate support stands at around 55,500 odd levels, which is very crucial because we have traded in this zone or range for a very long time, and as long as we are above those levels, there is no much worry. But once we start trading below this zone, then we will see a sharp fall coming in, which would be below 55,000 levels too. So we have to closely watch and trade cautiously in Banknifty. So in just one trading session of today's, there have been a lot of turnaround. Though Banknifty have been on the higher from the higher levels showing that sell-off, but there was some positivity that was expected to emerge today. However, that also went into a trap zone. Now let's see from the perspective of open interest. So at 56,000 odd levels, there is a significant support from the put writers, as well. The call writers have been adding to a pressure, and there was slight open interest also today built up at 56,000 odd levels. So this level is going to remain quite crucial. So if we start trading below this, then we would see the first zone of 55,500 odd levels, and then the second support for us is going to remain at 55,000 odd levels. On the higher side, first up we will have to cross 56,600 odd levels. only then we would expect some positivity to come in, and we might approach towards 57,000 odd levels later. So overall, there is a negativity on Bank Nifty from last 4 odd trading sessions, and today that has became clear that going longs is not something worthwhile on Bank Nifty at this juncture. However, PCR paints a different picture altogether. We still see 0.8 PCR overall, as well as 0.81 at the money, which still suggests positivity could come in. So we still hold at 57,000 odd levels and 56,500 odd levels. Lot of put positions, but in the coming days we have to see how that translates. Lastly, on the index is FINNIFTY. So FINNIFTY and Bank Nifty have been moving hand in hand, and from last 4 trading sessions on FINNIFTY also there have been negative sentiments. So ultimately we have closed 210 points lower, but the good part is we are still holding 26,500 and above levels. So that is one positive that we have seen in the FINNIFTY. So we are at the crucial juncture of the levels, this zone where we have consolidated for long and then moved up. So we are still above those support levels. So this suggests that we might see some recovery in tomorrow's trading session. If that recovery doesn't come and the fall continues, then we would have 26,200 as the strong support, and then if we break even that, then we can consider that there is a negative sentiments on FINNIFTY, and the sell-off would continue until 25,800 odd levels. So the immediate support for us would remain at around 26,200 odd levels, and then resistance would be today's high or maybe open around 26,800 to 900 odd levels would be our resistance. Now let's see from the perspective of open interest. So despite a lot of sell-off that came in at the higher levels, still we see good open interest positions are held from the put writers. So this graphs evidently shows that we are hovering in this 26,200 levels until 27,000 odd levels, and we are still at the mid of around 26,600 odd levels, where if there is good support that comes in from the put writers, then easily we could approach or move towards 27,000 odd levels, as the put writers have been supporting despite this strong fall. Now from the call writers we see additions got built up at every 50 or 100 odd levels until 26,500 odd, but still there is some positivity remains as far as the open interest positions are concerned. So let's see how the markets are expected to move in the coming days, and how the FINNIFTY is expected to behave according to those major indices movement. So overall, some positivity still can be expected from the perspective of FINNIFTY. So PCR stands at 0.7, which is slightly positive, and at the money is also 0.8, which is bullish. Now comes to the next segment, the participation from the institutions. So FIIs overall have added additionally 12,000 short positions, and now FIIs hold roughly around 1 lakh positions of short in the index futures, which is significant, and that is one of the reason why there is added pressure that came in today. On index options, on call options, they have been continuing 1.16 lakh odd positions longs, and on put options to hedge they have again taken long positions with 2.22 lakh contracts. So overall FIIs have went short with addition of around 38,000 odd contracts that got added. So net FIIs are bearish towards the index options and have short positions. Proprietary traders have been continuing their mild bearishness on the index futures and have added further 6,000 odd contracts in today's position. So overall net 17,000 odd contracts have been shorted by proprietary traders on index futures. On call options, they have slightly taken the positions to the tune of 8,483 contracts on call options. On put options also they are long with 48,000 odd contracts. So proprietary traders have also turned sellers or holding short positions in this particular market. So both FIIs and proprietary traders overall have been holding 1 lakh kind of short positions, which is negative. Now client on the other side on index futures have added further positions and went long with 73,000 odd contracts. On index options again they have shorted meaning to say added longs in today's market. So overall whatever shorts they were holding have been reduced on the call options. Still they have been holding 1.69 lakh contracts in shorts on call options. On put options they have been holding 2.84 lakh contracts short positions. So overall net, if we see, clients have been on long positions with 1.16 lakh contracts, which is contradictory to what the major institutions have been doing. So only time will tell whether who is holding the right positions. But yeah, overall tomorrow's trading session will remain crucial. If we do not reverse, then this negativity would continue in the next week too. So with longs we have to remain cautious if tomorrow's trading session won't recover, at least with 50% of the fall what we have seen today. DIIs in fact pumped in today with 9,394 crores in the cash market. Not sure if there have been some block deals today which is adding to this value. However, yes, those positions are significant. FIIs on the other hand have massively sold with 3,831 crores in the cash market, which could also be the reason for today's overall downfall of 1%. Now the last segment is the trending or buzzing stocks. So first up is Torrent Pharma, which despite in this negative market of 1% fall have turned positive and traded bullish. So overall the Torrent Pharma stock has been trading positive from almost like 6 to 7 odd trading sessions. And in today's market, in fact, there is no significant news about this stock. However, in the falling market, usually the investors want to jump to the defensive stocks or sectors, and pharma and healthcare being one of the best defensives. That is when, despite this fall of 1%, the healthcare and pharma sector did not fall at all. Just there was a mild bearishness with 0.1% fall. So 50% of the stocks in the pharma sector remained positive, and Torrent Pharma being one of the top stocks which had overall did well in the pharma sector. Now continuing to the trend, there are high positivity that this trend would continue until a significant zone of around 3,360, where we see a huge resistance coming in. So from this zone we had sharply fell down. We tried to recover here, but then there was further fall that continued, and then this zone was tested multiple times here, but it could not cross beyond this zone. So here as well you see it opened positive and tried to continue to break this resistance. However, there was a significant sell-off that came in, and now we are in a sharp recovery, U-shaped kind of recovery, and this recovery would sustain, and if we are maybe consolidating towards this zone, then be ready that there would be a sharp uprise that would come in after this resistance. So have a close watch and monitoring on this particular stock, and definitely keep a alert at 3,300 to 3,400 odd levels. Once you see this zone getting crossed, you can sharply continue with the rally by holding the long positions. Now next comes up is Paytm stock. So Paytm sharply plunged around 10% in intraday. However, it recovered lately in the afternoon trading session and closed with a fall of 6.77%. So this major fall or sell-off came in after finance minister's denial of reports suggesting that the government was planning to introduce a MDR rate, which is nothing but the merchant discount rate on the UPI transactions. Now let's understand what is MDR. So merchant discount rate is a fee that merchants pay to the banks and payment service providers like Paytm or PhonePe for processing digital payments. Currently, there is a zero MDR policy on UPI transactions to encourage widespread digital adoption. But there were market speculation from past couple of days, which led to the sharp rise in the digital or payment service providers like Paytm, PhonePe, and all these kind of stocks. So there was expectation that the government was considering to levy MDR on high value UPI transactions so that it would help banks and payment companies to cover their operational costs. So this news had fueled the rally in the Paytm stocks in the past couple of days. However, this did not go well. So considering the fact that MDR would have created a significant new revenue stream for the company, so the market speculated that this would continue. However, Finance Ministry in yesterday's close of the day session on Wednesday announced through the social media that all those news are speculation and completely false and baseless, and this are misleading and should not fall for the trap. So just with this announcement in today's trading session, we saw a sharp fall in the payment service providers or Paytm kind of stocks. So this is definitely a negative now for Paytm. That is when we saw a sharp fall coming in. Now let's see, we have a significant support at around 820 odd levels. If we continue with this downfall in the coming trading sessions, then we would open up for the next low of around 750 odd levels for Paytm. On the higher side, we should go long only after 900 levels are crossed, from where we saw this sharp rally. So until then, it is all negative. So that's it from our end on the analysis part. If you like this video today and has brought value to you, don't forget to hit the like button and share it with your fellow traders. For daily pre-market report updates, make sure to subscribe to our channel and tap the bell icon so that you never miss an episode. So thanks for watching today's video, and we will see you in the next video. Till then, happy trading.